Good afternoon. Good afternoon and welcome to another of our Webinar Wednesdays hosted by California State University Bakersfield Small Business Development Center. Good afternoon. I'm the director of the center, Kelly Bearden, and I'm your host today for webinar number 281 in our series going back to, January 2013. Celebrated our 10th year. And talking about one of the topics that we talked about a lot in our initial year in 2013, and that was crowdfunding. A lot about crowdfunding. So we're going to talk and get a great update on what's going on in crowdfunding. So we'll get to that in just a minute. We have our Webinar Wednesday resident economist that we'll introduce and bring in. But before that, a little bit of business to take care of. Coming up on Webinar Wednesday next week, we'll have Celeste Young Ramos, and she will be discussing the food and beverage program that is actually going to be hosted at California State University Bakersfield and is a prerequisite to the City of Bakersfield grant program that is going to be introduced also in July. We will actually take Independence Day off, even though it's a day later. But we are taking that day off. So we will not be here on July 5th. It's a little much to ask of me to ask Maureen to help put a webinar together on July 4th. Won't do it. We'll be out there waving the flag. So we'll be dark then. July 12th, we'll have Natisha Johnson and Nick Hill. Natisha's with the Launchpad at Bakersfield College. Nick Hill also with the Kern County Black Chamber of Commerce. And they are also members of the city grant program that'll be coming out in July. Justin Powers will be coming back to join us to give us an update on AI, very popular webinar earlier this year on AI. And also the July 26th, Melody Correa, the HR hotline advisor of the free hotline that we have, will be here on July 26th. So what's up today? What's up today on June the 21st? Well, a big hello to summer. Summer is here, and June 21st, the first day of summer, you wouldn't know it, around these parts of California. Normally a lot warmer than it usually is, but we'll take that with all the snowpack coming down slowly but surely, rather than a lot faster. So also up today is we have the queen of crowdfunding. We have Ruth Hedges, who will be joining us and talking about a great crowdfunding opportunity, about growing or starting your business, and a lot of details on that. Our resident economist will update you, and he will add value to a lot of the things that we talk about here on Webinar Wednesday. And also the Capital Quarter. Capital Quarter is going to give a tip on our small business debt ceiling. We had to endure a lot of talk about this government debt ceiling, so we came up on Webinar Wednesday with our own small business debt ceiling, the reasons that small businesses don't get additional or more capital. So we will also talk about the community calendar, some events coming up on that. Disaster relief continues, and we just love this mild spring weather that has now rolled into a mild summer weather. Our economic corner will pile on, and maybe or maybe not, we'll pile on some economic stuff. As always, we'll take your questions. Please go to the Q&A box with questions that you might have. And also, we will start off today with a poll. So a couple poll questions today. And what we want to do is we really kind of want to gauge what you might know regarding crowdfunding with our very first question. So regarding crowdfunding, I know a little bit on this subject, or maybe you know a lot. You've participated or supported a campaign, or you know very little or nothing at all. So we're just trying to gauge, when Ruth and I have a conversation later, what you know about crowdfunding. Do you know a little? Do you know a lot? Have you participated or supported a crowdfunding campaign, or you know very little or nothing, which will change after today, I can guarantee that. So just giving you another couple of moments, we have 52% of you that are already participating. So jump into this very first of three poll questions where we just try to do a little market research on our audience and try to find out what you know about crowdfunding. And 52% of you still participating. So I guess what we'll do is we'll go ahead and end the poll. And share the results with you. And right at the end, a few more responses. 60% of you know very little or nothing on crowdfunding. We have 20% of you that know a little, and also 10% that know a lot, and have another 10% that have supported or worked on a particular campaign. So thank you for that. That gives us a lot of good information moving forward. And we will stop that particular poll question and actually go to our kind of a little more whimsical first day of summer type questions. And the poll question, the first poll question is that the most 100-degree Fahrenheit days, those can happen here in Bakersfield. The most 100-degree days in a particular year was a total of 76, and that occurred in what year? What year did we have 76 100-degree days? Was it 1917? Was it 1939? Or was it 2021? So just a little background on 76, been through maybe the second most, which we've had recently, but the most 100-degree days in Bakersfield was 76. What year did it occur? 1917, 1939, or 2021? Yeah, 2021 was a hot year. There's no question about that. 2017, pretty toasty that year. But we have 64% of you in. What we're going to do is we're going to end the poll and share the results with you. And the results that we're sharing are that 55% of you said 2021, and you are close. That's the second most, with, I believe, 67 days. But actually, it was 1917. And I'm sure the thermometer worked correctly back then, but 1917 was the most days on record of 100-degree days, with 76 of them. Okay, that caught me by surprise too. 2021, 55% of you, remember that was hot. And also 2021 and 2017 were two of the days that were tied for second in that particular guess. So we'll stop sharing that. We'll bring one last poll question to the forefront here. And the last poll question is going to deal with the fewest 100-degree days. What are the fewest 100-degree days? They occurred in 1965 and 1999. And 76 was the most, so was the fewest 12, 20, or 49? So we're looking at the fewest 100-degree days in Bakersfield, and it occurred in 1965, pretty good year, and also 1999. From what I recall, another pretty good year. And pretty good weather-wise here in the San Joaquin Valley. So got 58% of you in right now. And we're looking for the fewest 100-degree Fahrenheit days that occurred in Bakersfield. Was it 12 days for the year? Was it 20? Or was it 49? Okay, we're going to end this particular poll, and we're going to share the results with you. And 50% of you say 20, and that is incorrect. 33% of you say 49, also incorrect. It was 12, only 12 days of 100-degree heat in 1965 and 1999. For the record, this year we have had one day of 100-degree heat as we begin summer. We very well likely could get out of June without a 100-degree day. Our only 100-degree day goes back to, moms will remember this, it was Mother's Day, 102 degrees. Okay, well, thank you for indulging us on a little bit of summer here in the southern San Joaquin Valley. So moving along, we had been talking a little bit about our debt ceiling over the last few weeks on how small businesses can get a debt ceiling. And they can get a debt ceiling, by not being able to raise capital. We talked about some of the factors that could occur, such as if you have the financial ratio, your debt to equity that is out of whack, you have too much debt. A lender will not lend to you based on that particular ratio alone. And that can create a debt ceiling, or maybe even a capital ceiling for your particular business. Your business could be limited by the liquid FICO score. The FICO score, a lot of people know for consumers, but for business, it's a range up to 300, and it's the liquid FICO credit score. So that could be a factor about your ability to raise capital. Last week, we talked a little bit about your unavailable positive cash flow. If you can't demonstrate you have positive cash flow in your business, that lenders are not going to likely allow you to raise your debt ceiling. And this week, I'm just going to kind of show a couple of quick examples on how leveraging equity that you can raise from a crowdfunding account that can actually add to your amount of debt that you can acquire. So let's look at this real quick, kind of associated with our topic today, which is equity crowdfunding. But there's another opportunity that you might have. And let me show you how this could work, how you can actually leverage from equity that you raise, which is a crowdfunding campaign. And in my example, it's not going to be the equity crowdfunding. It's going to be more or less along the lines of donation, which is, say, a GoFundMe, or a rewards-based crowdfunding campaign, which is Kickstarter. And let's say you're starting a business and you need $60,000. Your cost to start that business is 60 grand, and you have 5,000 in cash and another 5,000 in equipment. You know, a lender will take the amount of equipment into consideration that you are donating for that business. The equipment does need to be at the fair market value. So say you have a $5,000 delivery vehicle and it's worth $5,000. So if you take that $10,000 that you have down, then actually that would be 16% of the total. Most lenders are going to want to see basically on a startup, you know, oftentimes 20 to 30, maybe even a little bit more. So they're going to want a little bit more down payment. So what happens if you go out and raise $10,000 in a crowdfunding campaign? Oh, maybe it's a donation one. Maybe it's a rewards based. But if you're able to raise $10,000, that counts as capital that you're injecting in that particular business. Your lender will say, wow, you don't have 10,000. Now you have 20,000 of the 60,000, which equates out to a third down, or 33%. And then it makes it a lot easier to borrow that remaining 40,000. And it's really something that we saw a lot, or saw at least somewhat in the early 2014 and 15. People were getting excited about crowdfunding because it had so many other benefits that you could have. You know, not only did it potentially add equity to your potential deal and serve as a down payment or capital injection, but it did other things. Is once you put together your idea and your plan and did some good hard campaigning, you had your crowd out there, you were able to then actually develop a customer base that is going to be with your business for life. These are people that go beyond just buying your particular product. They talk about your product or service wherever you go. So really the added benefits of that type, shape, and form of crowdfunding is a way that you can actually exceed any potential capital ceiling for your particular small business. Our update on actually the on some of the disaster loans that are out there. We have a couple of disaster declarations. One of them goes from the end of February, which was responsible for a lot of the crazy weather that we had in March. And you'll see that in numerous counties. You'll see that there are business loans, economic injury loans, a lot of things to do with individual residents that are still available. Boy, this thing could have been so much more worse if we would have had a normally hot spring and hotter summer to start with. But fortunately, the snowpack is coming down relatively tame, rolling right on out to the ocean, the California aqueduct, and other sources. So the time deadline for those particular equity loans, or economic injury disaster loans, the EIDL program, and also the direct disaster loans if you had actually physical damage. For physical damage, it's going to be July 20th. And for, you know, an economic injury that has occurred, it would be January 3rd, 2024. Okay, let's move on and bring in our first guest, our resident our resident, not our resident alien. He is our resident economist here on Webinar Wednesday. After serving 40 years at California State University, Bakersfield in various capacities, including the Associate Dean of the School of Business and Public Administration and head of the Economics Department and more, Dr. Evans, always interested in what you've got to say. Take it away, please.
Okay, let me find this here. Good afternoon, everyone. Thanks for joining us on your lunch hour. I thought I would touch on two topics today. One is a kind of an update of the inflation interest rate goings on. And then secondly, a follow-up on a couple weeks ago on Webinar Wednesday, we touched on aging and its effect on trying to exit a small business. We're going to kind of continue this conversation about aging because it has many, many implications that are really pretty earth-shaking. First, on the inflation and interest rate front. Okay, probably the first thing to keep in mind is there's all sorts of price indexes out there, some better than others, depending on what the purpose is. If you're trying to track disinflation and how you're doing, like the Fed's trying to do, basically the price index that works best for this is the PCE price index, excuse me, rather than the CPI. And actually the Fed's kind of evolving toward a narrower sub-index that they think best tracks the wage price cycle, the momentum in that cycle, while abstracting from the volatile, more transitory things that can affect inflation. So what you have on the right here is basically an index such as what the Fed closely monitors, core services index based on the PCE price index. And on the left, what you have is the headline or total rate of inflation. And what you can see is that the core services index is, it does dampen the headline or the total index because it's subtracting from or leaving out those volatile components. The second thing, and probably more important thing to notice, is while the index has been decreasing a little bit, since, well, let's say the second half of 2022, it's still running around 4.2%, which is about double what the Fed's target is. This is really no surprise given the healthy rate that wages are still increasing, which you see on the left, and the strong profit position of businesses, which basically leads them to believe that whatever concessions they give to labor in terms of wage increases, they feel like they can pass it on and retain their sales. So given this environment, what the Fed recently announced is that it was revising upward by about 0.5% its end of year interest rate forecast based on the federal funds rate. So the solid black line is their most latest forecast of where interest rates will be, or at least the federal funds rate at the end of this year, next year, and the following year. The gray line under this is what their forecast was very recently. So you can see that they're now forecasting about 0.5% higher interest rate at the end of the year than they were just a little while ago. Now, why would they raise their forecast? Well, because they can control this interest rate. So by saying that they forecast it's going to be 0.5% higher by the end of the year, what they're essentially doing is announcing that they intend to make it go 0.5% higher by the end of the year. Okay, so we can expect really interest rates to continue inching up probably through the end of the year. What does that do for us in terms of the soft landing that we're really trying to engineer here? Well, remember that what a soft landing is it requires a very slow rate of GDP growth, let's say under 1.5% a year, that the intent would be to gradually weaken this wage price cycle that you saw on the one chart without actually decreasing the GDP. In terms of where we are, growth ran at 1.3% in the first quarter of the year, and the Federal Reserve of Philadelphia does a frequent survey of professional forecasters. The consensus forecast is about 1.3% for the entire year. So we're still on track in terms of a soft landing being possible or in the realm of possibility. Okay, let's switch gears here, aging and economic growth. A couple weeks ago on Webinar Wednesday, Michael Balstad discussed business exit strategies in the context of how the population's aging, how much more difficult it is to successfully exit a business because of the decline in the adult population or the movement toward that. No sooner did I get off the webinar that my latest Economist arrived in the mail. And interestingly enough, the cover story was the baby bust economy. And what Michael talked about is just one aspect of population aging. The Economist talked about another one that I thought I would summarize for you. The Economist's main concern in this article was, what does aging imply in terms of innovation and productivity increases? I was startled by this, but the article indicated that there's 120 countries and territories in the world that already have a total fertility rate less than the replacement level. And what this means is there's 120 areas that are now on track for eventual population decrease. By 2030, it's projected that there will be 136 countries and territories that are at a fertility rate below the replacement level. Well, that's just backdrop. What the Economist is interested in is what's going to happen to average living standards. Okay, here's a simple equation. The average living standard would be the number of workers we have times the output or the income per worker. And then we would have to divide all of that income or output by the population to get at the average living standard. Okay, we know that the labor force or the workers as a share of the population will be shrinking pretty significantly. So that means that output per worker, productivity increases, innovation, whatever you want to call it, has to really crank up a bit to offset this decline in the working age population as a share of the total. The Economists raised a couple concerns about whether this is feasible or not. First, they pointed to research by psychologists that contrasts what they call fluid intelligence from crystallized intelligence. Fluid intelligence tends to cap or have a ceiling of around 30 years of age or so. Crystallized intelligence, I guess that just means experience, probably has a ceiling of 50, 55 maybe. Now, the problem the Economist magazine sees is that the truly disruptive patents are overwhelmingly filed by young inventors relying on fluid intelligence. And then they point to a couple things that are maybe the best way to understand them is to think of the Silicon Valley, but in reverse. The Silicon Valley, what happens is you move more and more inventors into that region. And not only does the total number of inventions goes up, but the inventions per inventor tends to go up because they're feeding off of each other, creating all sorts of synergies. Well, a declining working population really has the opposite effect. As the inventor population goes down, there's less synergies available, and not only will total inventions possibly go down because there's fewer inventors, but the number of inventions per inventor very well could go down. The case study they cite is Japan, which very recently led the world in about 31 categories of patent creation. And they've now lost 28 out of those 31, and they're on the leading edge only in terms of 3 of those areas. And then there's other evidence suggesting that as the median age of the population goes up, the rate of small business formation goes down. And again, it's just not that fewer workers mean fewer small businesses formed, but also the rate itself, a smaller percentage of adults deciding to form small businesses. And we know this is the key to entrepreneurship. So, okay, so there are many areas that are already, roughly, at the level where their adult population is leveling off, or they have a skills deficit of some kind. They're relying on in-migration to really provide the labor force they need. The Economist asks, where is the in-migration going to come through from if all the regions of the world simultaneously are experiencing a decline in the adult population? Okay, a couple of weeks ago, we talked about just one area where Kern County has a kind of like a digital skills deficit, mid-tech and high-tech positions, where their number of job postings per year exceed the number of positions that can be filled. The positions that are filled to a large extent are from in-migration from other regions. So this just points out that for this, as well as other areas of education and training, we're going to have to start really doubling down and doing a better job of training and educating our own. With that, I'm going to pass the baton back to Kelly.
Thank you, Doctor. Fascinating stuff. And, I'm not too surprised that you would subscribe to a magazine called The Economist.
Oh, it's a good one.
Worldwide.
Kind of like a libertarian, middle of the road slant.
Well, thank you, and we'll see you in a couple of weeks. Moving on to our community calendar, we have a couple of events. One's coming up tomorrow is the USC Capital Access Workshop, and that goes from 9 a.m. to 12:30. Of course, it's online on Zoom. Maureen will have something in the chat box, a link to register for that event. And then also next Thursday, if you want to know information about the economic injury disaster loan, specifically the COVID that so many people got during the pandemic, there will be an interesting webinar next Thursday at 10 a.m. with our friends from the Fresno district of the SBA, and join Don Golick, the district director, and Richard T. Mostert on that particular presentation to get all your questions answered if you have one of those idle programs. Our toolbox is there. We have our hotline, our YouTube channel, and now it's time to bring in our special guest. And our special guest today is Ruth Hedges, and Ruth is a crowdfunding industry pioneer. That's right, she goes back to 2012. National regulatory crowdfunding expert, speaker, great conference host as well. She doesn't have that there, a CEO of the Rise Up Crowdfunding Portal that we'll get into today. Ruth previously founded Crowdfunding Roadmap. She hosted the internationally crowdfunding conferences in her hometown of Las Vegas, where she may be gloating over the Golden Knights' recent Stanley Hockey Cup championships. Ruth, it's great to have you back on Webinar Wednesday. Take it away.
Thank you so much for inviting me. I really appreciate it. And it's great to see you again. And you didn't tell people that you did come to my conference in Las Vegas.
Several times.
Yeah, which I really appreciated. This is what I represent is actually something that I helped pioneer in 2010 during the recession, which was to legalize everyone to be able to become a venture capitalist or an angel investor without being an accredited investor, without having to have a certain amount of net worth. And we went to Congress. We spent a couple of years walking the halls, convincing congressmen and senators. And then on April 5th, 2012, President Obama signed into law the Title 34A6, the Regulation Crowdfunding Bill, which legalized what's called equity crowdfunding or regulation crowdfunding, which is the term that the Securities and Exchange Commission refers to. During the recession, during COVID, I was approached by a friend of mine who works now at Coca-Cola. He was at Microsoft at the time, and he asked me to do a virtual conference to help introduce this type of regulated crowdfunding to more people who were struggling to find capital during COVID. And after that conference, we had over 2,000 people attend that webinar, by the way. I'm very proud of that webinar. And since then, we decided to go even to another step further. I don't know how many of you on this call know that statistics around venture capital are very dismal. Last year, there was something like $146 billion, and less than 3% went to women and minorities. And the fact of the matter is that we set startups and small businesses up for failure when we encourage them to build it and they will come, build this business, and VCs will just flock all over you and fund you. And that is just not the truth. So we're excited to have launched this new funding portal. And I'm going to play you our video, which is the introduction to what we do.
The American dream has powered the hopes and dreams of entrepreneurs for generations. But for too many, it has been denied. All that is about to change. Inspired by a lack of inclusion, celebrating the diversity that drives innovation, committed to access to capital and collaboration. Welcome to Rise Up Crowdfunding. Rise Up Crowdfunding is the first equity crowdfunding portal built for the new majority of women, Black and Brown, LGBTQ, and veteran-owned businesses. A funding portal where your company can raise up to $5 million by calling upon the general public, not a bank, an angel investor, or venture capitalists for funding. We are on a mission to inspire and empower millions of individuals just like you to invest their money in innovative, diverse, small businesses and startups that have been left off the capital raising playing field. We are going to do this using equity crowdfunding, a process that allows a user to grow an army of passionate investors from their fans, followers, customers, and the general public to drive entrepreneurship, supplier diversity, and transform the communities where they live. It's a process to help build your legacy into a reality and have a positive influence on the future of the world. We look forward to you joining us.
So that pretty much explains exactly what we are trying to do at Rise Up Crowdfunding. And I would love to take you guys on a little tour of the website. First of all, I want to spend a few minutes, since watching the poll, I want to spend a few minutes explaining what crowdfunding is in general. Crowdfunding is basically what it's in the name. It's funding from a large group of people or a crowd of people. There are several types of crowdfunding. Some of you may know donation-based crowdfunding, which is like GoFundMe. Then there is reward-based funding, which is like Kickstarter or Indiegogo, where you go and you get you back. You're called a backer, and you back a campaign, and in exchange you get the product at below manufactured suggested retail price, usually when it's in development, and usually when the entrepreneur needs the funding for inventory. They usually have one prototype, and they're trying to get money to be able to manufacture. Those are the two types that were around prior to President Obama signing into law the bill that legalized regulation crowdfunding. Regulation crowdfunding is the same process in terms of marketing. You still need to build a crowd, but the difference is that you have to disclose certain information. You have to disclose certain legal information, and you have to disclose certain financial information. And then obviously you have to go and build a crowd of potential investors. And, you know, it's usually less than $100 is usually the minimum of a crowdfunding investment. So this is not difficult for a lot of people to own some shares in your company. And the beautiful thing about this is that you can take them along with you on this journey, and they become brand ambassadors. There's a company actually here in Las Vegas, which it's called BrewDog, and they were a client of ours. They have done this over and over again, I think more than 8 times, and they've raised over $150 million. They just opened a brewery and a restaurant on the Las Vegas Strip here in Las Vegas. And they're all over the world now. So people who are shareholders, they get a little card, sort of like an American Express Black Card, and it says, I'm a shareholder, and they can go into any of their bars and hand that card to the bartender and say, hey, I'm a shareholder. And of course, the bartender or the waiter doesn't know that you've only put in $100 or you've put in $100,000. They don't know. And you get all these great perks for being a shareholder. So this is another way of building a whole bunch of brand ambassadors. And it's much more powerful than if you got a check from one person or you got a check from a bank. You also don't need credit. You don't need collateral to do regulation crowdfunding. You do need to have a marketing strategy, a very powerful marketing strategy, and you need to have people to help you. You increase your chances of raising the money by 70% if you have a team of 4 or more people helping you with your crowdfunding campaign. So you really don't want to do this alone. If you're a solopreneur, you want to make sure that you have friends and family who are willing to work with you during the months of the time of your crowdfunding campaign. Some of the things that we've done is we've developed this premium investor program. One of the things that we're saying basically is that it shouldn't be left just to the entrepreneur to build the crowd. So we want to build a potential crowd ahead of the offerings that will be coming onto our funding portal. And so I would love to ask all of you to come to riseupcrowdfunding.com and sign up. It's free. But if you ever want to make an investment, you can get 10% more shares in that offering and a bunch of other perks, which you can read about here. So you get 10% extra bonus shares. There's no you get on a priority wait list. There is a cap, by the way, in regulation crowdfunding where you can only raise up to $5 million. So you want to make sure that you don't miss out on a very exciting offering. And with being a member of their premium investor program, you'll know about, this ahead of time. So if you want to join this, please go to Rise Up Crowdfunding and sign up. It's free. One of the other things that we're doing is we're focusing on supply diversity, which none of the other funding portals are doing. We're trying to help companies not only raise money, but then once they've raised the money, what are they going to do with the funding to help grow their business, and most importantly, have a return on the investment of their investors, because ultimately that is one of the objectives of people, investing in your company. So what we've done is we built this, we are focused on supply diversity, and we're working in collaboration with Coca-Cola. Let me show you this. We are working with Coca-Cola they are interested in working with us. One of their, the senior director of supply diversity is on our board of advisors. And we're very excited about this because, you know, Coca-Cola, of course, is a brand. It's all over the world. And there's lots of small businesses and bodegas and restaurants that serve Coca-Cola that need access to capital. So this is really what we're doing. And, you know, I'd love to take some questions from you guys or from Kelly.
Yeah, let's get some questions rolling around here. And I'm going to stop your share real quick and we'll just jump up here and we'll start discussing this. Or maybe if you could stop the share.
Oh, okay. Stop the share, stop the share.
I mean, I could do that and then stop. It wouldn't let me go directly. So, okay, well, let's start at the beginning. And this is kind of a couple of different avenues out there. There's a couple of different approaches that we could have. One could look at the typical deal that somebody might have on this particular platform. So let's kind of be thinking about that. So, because on this, we're going to have investors. And the one nice thing from the investment, this is the thing I loved about your conference, is that for the first time ever, being a small investor, I can go invest in a company that who knows could be the next Facebook, for example. Whereas that was never an option to me before. So as an investor, it gave me, who knew a little bit about small businesses, an opportunity to invest in small businesses. And so that's one part of the aspect. The other part of it is the individuals that are looking for capital that now can do a campaign and have this investment campaign. So let's look what like a typical deal would look like on your particular portal.
So we recently just launched. We do have about 8 companies that are in the vault. We call it the vault. That's where you prepare all this and obviously get ready to raise capital. They're very diverse. One of them is a coffee company that has mushrooms in their coffee. They're not the kind that you get high from. They're medicinal mushrooms, but it's a new thing that is popping up. We have a Hispanic-owned production studio in Hollywood that is in our vault. We have a boxer who won a gold medal. They're doing a biopic movie about him. That's another one. And the whole boxing, he won a gold medal during Muhammad Ali's days. And they want to tell his life story, which is absolutely amazing. We have a really cool fashion designer who designed the first sort of skirt for men, high end. He's been in fashion shows from Paris to, he's going to be in Fashion Week in New York in September. We have a software as a subscription travel platform. It just goes on and on. I mean, the amount of variety that that people can use this for is unlimited.
Okay, well, since I'm intrigued by the mushroom coffee. So I would assume that's maybe a dried mushroom that's in like a dried bag.
No, there's you don't see the mushroom. It's coffee that comes out of a coffee machine. Like it's Starbucks. Like you go to a coffee.
Oh, okay.
They're a coffee they're a coffee shop.
Okay.
And you buy a cup of their coffee, and in it, it's not just grounds of coffee, but some kind of mushroom essence.
Okay, I got it.
Do healthier.
It's like that old movie, There's a Girl in My Soup. There's a mushroom floating in my coffee. But so on this, let's just kind of, so if I'm looking to raise capital, let's say I'm one of your businesses and I'm wanting to, I feel I need to raise $50,000.
Okay.
So how would somebody go about that? What would they need to do? What is the information they need to provide? What some of the steps that you would go through once you get the portal up and going and they could do the work? Because there's some work involved to get that on the portal.
Right. So our funding portal, and we are one of many, is focused on companies that are looking to raise $500,000 and up, because we spent years, and you know this, because originally the cap was $1,070,000. And that limited a lot of companies from raising real money that they needed to scale their businesses. So we spent a lot of time fighting Congress and the SEC to increase the amount to $5 million. So we are looking for companies that have a larger need and have the ability to raise that kind of money.
Excellent. So I want to raise $500,000.
Right.
What do I need to be an existing business? Can I be a startup? Do I need to have audited financial statements? What are some of the things I need in place in order to be considered for this?
Okay, so you can raise the first $1,025,000 with self-certified financial statements. It's like your tax return, you sign it yourself. But if you go over that amount, you would have to stop your campaign and go get certified financial statements by an accountant. So we recommend that you do that ahead of time. If you want to raise more than $625,000 up to $5 million, you will need audited financial statements. So you have all those options, but you do need to have those before you can obviously go and file with the SEC and do all those kind of things. There is a thing called a Form C, and this form is the questions the SEC wants to know about the company when we register your offering. And when we register your offering, we send that document and screenshots of the offering page to the SEC, and it gets filed. And there's a file number. And that's it. There's no approval process. This is one of the great things about this. It's not like a bank. Nobody is a gatekeeper in this process. It's you and the public. You have to obviously do paperwork like you would a loan. There's, like I said, you're still selling securities and it's regulated. So the regulatory part, people still have to do, but they don't have, nobody's going to stop them from doing this. And that is a big difference.
Mm-hmm.
And then there's obviously the biggest challenge, which is the marketing side. You have to go out and you have to promote this all over the place and encourage people to want to buy a small little piece, $100, $200, whatever your minimum is in your company.
And for that, you get actually ownership in the company.
Yeah.
For an owner, you get shares, just like if you bought Tesla or whatever.
At the beginning of, right. And let me give you an example. I've talked about this at the convention, so you might have heard this. In 2013, a 22-year-old kid invented Oculus glasses. Okay, remember that you can buy them all over the place now. He went on Kickstarter, which was a reward-based platform, and he raised $1,200,000 from 900 people. They gave him $300. He said, these glasses are going to retail for $600, but if you give me the money now, I can manufacture this, and you'll have one of the first pair of Oculus glasses anywhere in the world. And that resonated with people, and he raised the money. Well, a year or two later, he sold his company to Facebook for $1 billion. And those people got zippity doo-dah. They got their glasses, and that was it. Now, we did the math, and we figured out that their $300, they could have gotten the glasses. They could have bought as many glasses as they wanted, because their $300 would have converted to $40,000 return on their money if that $300 had been an investment. Mm-hmm. And that is the beauty of regulation crowdfunding. Now, will it happen for everybody? Of course not. But it happens, and it happens to VCs and angels all the time, or they wouldn't continuously try to invest in companies. They fail a lot too. I mean, they're not any smarter than the rest of us. They have a very high failure rate, but they're willing to gamble, because on the ones that they do succeed, they make a lot of money.
And I know, Ruth, you and I see the promise in this, and we have for quite a while. I remember in 2012 when the Jobs Act was passed. I remember that day. I remember the excitement at the SBDC of the promise of this, and we're 11 years later. And we're just now, I think, starting to get that momentum built up to where we're going to see that potential realized. We've talked about it's been a little bit frustrating. So the more that we can do out there and the more that we can help let people know about these opportunities and get some of our, maybe our clients on there eventually, I think we'll go a long ways into educating people more on crowdfunding.
Yeah, I mean, look, I have a bone to pick with the government. In the Jobs Act, Title VII says that the government is required to educate the public on this new bill. They have done a miserable job doing that. You've done a fantastic job. You've done probably more collectively than, you know, all the other SBDC offices combined. I mean, and the SBA and financial advisors. I mean, the list just goes on of people who should have been introducing this to entrepreneurs, especially after COVID, when they were giving out $1,200 checks and a lot of people didn't necessarily need that money, or they didn't need all that money to pay bills. They could have said, hey, go to a funding portal, invest. Or if you need to raise money because your company, your franchise is closing down or whatever, go set up a campaign and raise money. There's lots of money out there. There's trillions of dollars. I mean, there is money in, you can go after people anywhere in the world to do when you have a regulation crowdfunding campaign live. So you're not limited to just the 350 million Americans. Not that that's a small group of people with money, but if you have friends in Italy or France or somewhere else in the world, they can become investors too.
Go to some of our questions that we have. The first one is, I have a food truck that I want to start in July or August. Can I apply? So I think that they can apply for some form of crowdfunding. They can do some crowdfunding, but it doesn't fit in your portal.
Not really. I mean,
Size.
yeah, the size of it is probably going to be too small. Unless they wanted to, they had a business plan to have food trucks all over the country.
Or maybe you have that food truck in a year, you find a brick and mortar location and you need $500,000.
Right, exactly.
And that's fairly common.
Yeah.
I've seen a lot. I've seen that a lot.
I would encourage people to go, the short form application is very easy to fill out. It'll give you an idea of what you need to have. It's free. The whole process is free, by the way, until you actually raise some money and you start to take money out of your offering, then we get paid. Other than that, it's free. It's a whole free process. And it's a great educational process to learn getting inside of our funding portal.
Now, what I will add to that is that we have had clients that have started food trucks on Kickstarter. They did exactly the example I did earlier, where they leveraged that into a small business loan to buy their truck. They operated their truck. They had amazing success in their brick and mortar and truck now. We've had clients do that. That possibility is out there. You have to have a crowd. You can't be like me. You can't be like Kelly Bearden and have 56 people that are associated with your Facebook account. It ain't going to work. You got a crowd. It can be done. You can contact the SBDC. We can help you.
Yeah. And, let me tell you something. When I started in 2012, after the Jobs Act was signed into law, I went on LinkedIn, and I don't remember how many followers I had then. I have over 11,000 today, but at that time I had a lot less. And I just started working that platform. It is an unbelievably powerful place to spend some of your time. I found speakers there. I found sponsors. We had over 3,000 attendees from 25 countries. I wasn't advertising in Singapore. Somebody came from Singapore. Somebody came from Italy. Somebody came from France. I mean, so these platforms are incredibly powerful.
Yeah. And the great thing, I think I talked to a Malaysian there, because, they do speak very very good English. I think I remember that. So,
Really? Oh, cool.
Okay. So going into the chat,
Okay.
you're popular. They want your contact information, Ruth. They also questions about, are we going to be able to get a recording? Well, there's always a recording of this, unless I goof up, and today, who knows, but usually not. So there will be a recording. It's on our YouTube channel. It'll be on our YouTube channel, usually by the weekend. And oftentimes we will mail those out. So let's just run through the chat box, what Maureen, our fantastic producer, has put in here today. And there's a lot of things on SBA disaster, a copy of the recording, again, YouTube channel, CSU SBDC. You can subscribe too. We have 330, 340 subscribers. And then you get the information when a new one goes in all the time. The USC Capital Access Conference, which is tomorrow morning. You'll have to put up with 10 minutes from me, but that's part of the promotional fee here. Some of the things, there's the Rise Up Crowdfunding link that Maureen has put in here. Contact information. Why don't you share that now, if you can, Ruth, with people?
Well, the best way to get in touch with me is to go to the website and register. Leave a note for me once you've registered, or you can go to LinkedIn, Ruth E Hedges on LinkedIn, and I'm happy to connect with everybody and we can start chatting away. I see this question. I create an LLC holding for a restaurant group startup and I'm finishing up the business plan. What is the average recommended time frame? So this is not like going to a bank and applying for a credit card. It is not that you're not going to get money in 3 days or 5 days or 5 weeks. I mean, it really is part of your whole marketing strategy. You got to build a group of consumers, and that same strategy is what you want to use to build a crowd of investors. And all you're doing is changing the messages. So whatever the marketing strategy is, all the places, the lead gen you're going to do, the email marketing, the social media marketing, all of those things that you have to do anyways, you're going to do them alongside the marketing that you do for your business. You're going to do a separate campaign of all those things with messaging around your crowdfunding campaign. So however long that takes is however long it takes. It's really, I mean, some people have a whole marketing division in their company and other people are 2 or 3 partners and they're doing it all themselves. So it's really hard to tell.
Yeah, great. See if there's anything else in here. I'm always intrigued by middle initials, and you don't have to answer this question, but what does the E stand for?
Ellen?
That was my guess.
Was
That
it?
my
Ellen?
guess? Yes. Okay.
Yeah.
Well, it sounds like it should be Ruth Ellen. I mean,
I know.
it seemed like the
And
common-
I'm from Boston. I'm not even from the South, but it sounds like I have like a Southern name, you know.
Mhm. Okay, so Ruth, last points you might want to bring up. Last chance to get a question in the Q&A box for Ruth as well.
Yes, please. I cannot stress to you how powerful this is. I mean, there is, you know, billions of dollars on all of these platforms. That this is something that is so applicable if people would just do it. It is really an exciting process. It is game changing. It is life affirming. It is to have a crowd of people supporting you and coming along with you on this journey that you're on, and all of the things like, you know, Kelly, we've known each other forever, and he is still bringing me, because we're part of a tribe, right? We care about this access to capital, and there's so many of us out there, and we're part of something together. And that's what crowdfunding can do for your business. It can help you create a crowd of supporters who will be there for you through your whole journey. You can tap into for advice and mentoring, and they become consumers. They're always buying your product, like, because they own a piece of your company. So what better client than somebody that owns a piece of your company?
Yeah, business development built right in.
Yep.
Well, Queen, it's always a pleasure to have you on and talk to you about crowdfunding. We got to get this thing going, man.
Yeah, seriously, it's way overdue.
It's way overdue. It's too good of a thing not to be way, way, way better. So, well, we'll keep plugging away. I'm going to encourage our SBDC staff to go to Rise Up Crowdfunding to sign up and to learn more, and kicking around the website. You'll be seeing me there.
Yeah, wonderful. And like I said, anybody wants to connect on LinkedIn, I'm happy to connect and, you know, answer any of your questions.
Fantastic. Well, thank you for joining us.
Thank you for inviting me.
We'll have you back. And any questions, you know, go to Rise Up Crowdfunding. Ask Ruth right there and then.
Thank you, all of you in the chat. I appreciate all the compliments and the comments, and you know, we just have to keep moving, keep the free world moving here.
Sounds great. Okay. Well, that's going to wrap up number 281. guess what, Ruth? We'll be back for 282 next week.
Okay.
And we'll be talking about the restaurant training class, a standing training class for you restaurateurs out there. I'm telling you, it's outstanding. So we'll be talking about that, a little bit about the City of Bakersfield grant program, July 5th. Maureen is really excited. We're not going to be here. And we'll be back in July and August and beyond. And we're going to bring out some crowdfunding surprises this summer. I talked a little bit to Ruth. I'm not ready to unveil yet, but one of the projects that we have that's going to be coming. So stay tuned. More crowdfunding on its way. Thank you so much for joining us, Ruth Ellen Hedges. Great to have you here.
Thank you.
And we'll talk again soon. So everybody have a great week. For Ruth Hedges, I'm Kelly Bearden. We'll see you next week. Bye-bye, everyone.